Hey, what's going on, guys? This is a members only video, so just for you subscribers. And so what I wanted to do was kind of, talk about kind of the low volatility environment that we're in right now. And, when we get into these modes, it's really important to be cautious and to watch your trade size. And I'll show you something that you guys can take with you. It's actually pulled from the binary options courses, but it has to do with trade size and just kind of like how I approach things, and it relates to really where we are with the VIX. If you're not familiar with the VIX, it's the volatility index of the stock indices. And there's actually VIX indices for the various foreign exchange pairs, FX pairs. I'll show you that as well. So what I have up, this is in Thinkorswim. Symbol is VIX. You can bring it up yourself if you have Thinkorswim. But if we take a look at the chart, earlier in the year we had a massive spike up into the 50s. This was when the ETF known as the XIV, so it was an inverse correlated ETF to the VIX index, and it blew up. It blew up after hours and just completely broke the volatility in the market, and so that spiked really high. So we had a lot of trade entries all through this period, all the way up until recently. Again, our high probability setups are looking for safe entries, and so believe it or not, the higher the volatility, the easier it is for us to find safe entries. What ends up happening is, as volatility shrinks, they don't price in premium into the market. So what happens is that as we get into the evening hours, normally we're looking for something around 3 p.m. Eastern or something like that. And normally if we got what's been historically, and I'm not talking like years prior, before we started getting into this low volatility nonsense, we would see decent premiums on high probability strikes. But when volatility shrinks, then the market makers don't want to price out premium because they're not expecting a lot of movement in the market. So all of their pricing models tie back to the VIX. That's kind of a tough thing when it comes to Forex, because sometimes Forex can be volatile even though the VIX is at a low reading. And so the stock market might not see big moves during the day, kind of muted. I mean, decent moves, but nothing like where you're seeing big bounces up and down on a higher VIX environment. So that's where things can get a little tricky, because you still are dealing with Forex volatility, but the market makers aren't pricing it in. And so that's the type of environment you want to stay away from. You actually want to probably stand down and wait for the VIX to get back above 13. So why 13? Well, that level is basically a level that we just kind of settled on over time, noticing that above 13 we got more trade entries, better hit rate on the system. Below 13, entries were really hard to come by, and that comes down to the premium crush. We talk about premium crush, right? This is more specifically for binary options. When we see the premium crush, that means that what they're doing is let's just say that we're able to sell something for $15. As we progress towards 3 p.m., they might crush that. Now they're not going to offer it at $15 anymore. The best you can get it for is $8. Well, that doesn't really work with our system. We're really looking for a minimum of $15 premium capture, because we're trying to do like $10 better than what the probabilities are telling us. That way there's always like a cushion over time that you're going to outperform the losses. And so, yeah, you could take trades less than $10, but it's just rather not put that risk out there, especially when you're that far in the money, because you're risking $10 or you're risking $90 to make $10. Starts to get to the point. I mean, there's some situations where that's viable. If you've got some mispricing out there and there's a couple minutes left, sure, pick up those $10 bills. But when we're dealing with 3 hours left or more, really want to get that minimum $15. And that's just something that has developed over time as the technique guideline to go off of. Not to say you couldn't, if 15s aren't filling, but it's there at 14, that kind of stuff, that's okay. But it's like getting down, we're talking about much lower premium capture you want to try to stay away from. So on the chart here, basically we zoom in. We were humming along pretty well until about November 11th, I think, was our last trade prior to today on the official. We've had some room trades, and as you guys know, those aren't the high percentage entries. They could be, but for various reasons that I filter out for you guys, I just can't make them official. And honestly, those, if you've been in the room long enough, those don't hit as high a win rate as the official entries do. So you trade those a little lighter or try to get more premium on them. But that being said, September 11th was, let me get my pointer out. So September 11th was here, and this is the VIX. So VIX poked its head above it slightly and then rolled back over. So largely we've been under 13, and what's happened? Like no entries. So today we had an entry, and again, that entry was tricky. I was telling you guys heads up about it prior to it being official, and then when it was official, we had a small window of opportunity. It actually ended up filling more after 4 p.m. because of the Federal Reserve Chairman made some hawkish announcements, and there was some spastic price action briefly. And normally we don't go into trades like that, especially when there's a high impact announcement. But on today's one, they've kind of been having the same narrative. We weren't expecting anything too drastic. He just came out a little more hawkish than what he had previously said on prior speaking engagements. And so I think the market wasn't quite anticipating that. But by and large, I think the market kind of whipped back and forth and then kind of settled in the mean there. So at the end of the day, not a whole lot had changed in regards to that. But EG we like to be in because it's kind of dollar neutral. You're crossing between the euro and the pound. So, but that's why we've been kind of quiet on the official trades, because as you can see clearly, we've been below 13. We start getting into these sub 12 levels, it gets really hard. So just keep in mind, we've been here before, and we'll be out of here again, and we'll see more trades. So just bear with us. This over time, this is fairly consistent. Exception being that we go through some of these periods where we can't get a lot of trades off. But the system is 117 wins and 6 losses. People would kill to have those kind of results, and we're going to continue to have those results. But we have to be patient when it's required. So I wanted you guys to understand that. The other thing I want you guys to check out is, when we get in, so these lines here is the Euro VIX, so Euro Dollar VIX. This is the British Pound VIX, and this is the Yen VIX. So what you kind of don't want to see, normally these things more or less kind of flow together, and if the VIX is up, so are these. But what you don't want to get into is when we see it, the VIX, which is the candlesticks, start to go down, but then we get a rising volatility in the Forex pairs. And that's actually kind of what we're seeing right now. So this is like, you make money in this environment, you're doing really well, because this is about as hard as it gets with binary options. So this isn't what I want to see. I don't want to see these volatility indices on the Forex pairs going up and we're dribbling down on our VIX. So, as weird as it sounds, you kind of almost want to see the market correct here and get the VIX spiked back up over 13, and then it's going to give us a much more favorable trading environment for binary options. So just thought I would share that with you guys, just so you can understand where we're coming from on these trades. As far as the US 500 goes, it's been a little tricky. Last week we were kind of shying away from official trades because of the price action in the market. I'm sorry, not the price action in the market, the news in the market. It was kind of like a minefield last week. So I'd rather err on the side of caution than get into some trades that might get blown up because of news. Now this is interesting because we've seen a big sell-off, and this happened right around 2 o'clock, a little after 2 o'clock, and we got a big move down and a big move down. Personally, I think that this probably was, and there always is, insider information, and somebody probably knew that the tone coming out today was going to be more hawkish than what's been out there, so from the Federal Reserve. So you got some early selling, and now we're down here at 29.25. So obviously, you know, when I'm looking at this stuff, I want to look at strikes that are kind of outlier, or I'm looking at a level, support and resistance level that we can key in on, and then maybe drill down and look at what the indicators are telling us on the smaller time frames to kind of pinpoint an entry. So that's kind of my thought process when we do this. I do have probabilities for the ES as far as ranges and stuff like that, and that's something I'm going to be looking at more closely as far as something that maybe you guys can use for yourselves, working on that. I don't have anything quite yet, but something where you guys could look at probabilities and take some entries. And this would all be framed around how the binary option contracts are designed, their different expirations. So for tomorrow, guys, you know, basically this area here at around 29.26 was a level, also that higher one at 29.29. A couple of levels of support and resistance that I was looking at. 29.26 is actually kind of where we bounced off of. That would be resistance here right now for this move down. Obviously tomorrow we'll be looking at, you know, where we are in the magic channel, but if we get a drop below 29.20, most likely we're going to be looking at trying to take a stab at a long position there. Otherwise, we'll take a look at, when the market opens, our levels that we consider safe for the day. So what we're going to try to do is give you guys some heads up in the morning of what we're looking at. And you guys can, obviously, more experienced traders could probably take things into their own hands. Otherwise, when we start seeing those premiums, again, it's the US 500. So the way I look at it is we're either going to get like a major support and resistance level close to at the money on that type of trade, and then maybe we'll scalp out of that at, you know, $20 premium or more, or hold it. It really depends. Or we go out, and I really don't like to get less than $18 to $20 if we're going to go far out on a strike, you know, for that lower premium capture. US 500 can just really drive you nuts, shake you out, and it's a very tricky. It's the hardest instrument to trade, guys, because all the algos, all the brainiacs, everything in the trading world ends up going back to this US 500, this S&P futures index, and so you're trading among the best of the best. So making money on that is a feat unto itself. But anyway, so I hope this helps. If you got any questions or whatever, let me know in the room. Again, members only video for you guys, kind of just showing you what I'm thinking about on the binary option side of things, since the you know, official entries on the Forex stuff are bread and butter. On the binary options has been a little quiet, so I just wanted to give you guys some background. But bottom line, stay patient. Again, we'll be communicating every day on things like the US 500 and whatnot, communicating if it's room trades or not. That way, you know, we'll keep things going. And then once this volatility gets back to more normal ranges, we'll be back to consistent earnings again. All right, guys, so the other thing I wanted to do was talk about money management and how it relates to the VIX. So this is pulled from the binary options course. If you guys haven't seen the course, want to take it, go to the website. It's available there. But those of you that have, you already have seen this. But I'm just going to go over this really briefly. So binary options are highly leveraged, obviously. So strict money management is required. If the VIX is below 13, okay, so that's the environment we're in now. So it's a low premium environment. We focus more on at the money strategies. That's something that we haven't been doing like on the Forex side of things. And I've been, lately, I've been kind of more, because I'm trying to be conservative for the group. So I kind of, you know, this is more on this, we're talking about kind of when you're implementing the strategies for yourself. You know, it's better if you can find a higher probability setup at the money. That's kind of the more favorable approach, because when you get deeper in the money, again, they're not, the reason why you go at the money is because they can't really do anything at the money. Like if the price is at the money at like $55 premium capture or whatever, there's not, or $50 premium capture or $45 premium capture, there's not a lot they can do. The price is at the money. So there's not a lot they can do there. But as you move out from where the price is, you're trying to buy safety away from it. They don't give you enough premium out there. So that's why, you know, you would focus more on ATM type strategies. But again, I don't do those on official calls because I'm trying to find, you know, official calls are very conservative. Recommended max max risk per trade should be roughly $100 per thousand of trading capital. So what this means here is roughly 3 out of the money contracts. So you're risking a little to make a lot. A couple at the money, 2 at the money contracts. So you're going right at like 50-50 odds as far as pricing is concerned with the money makers or market makers, or 1 in the money contract. So that's our typical official type call. All right. So that's just a rough guideline. 100 per 1,000 of trading capital. Now, if we're above VIX 13, this is a high premium environment. So the in the money strategies or our official type calls, that's where we like to that's the kind of environment that we want. So the recommended max risk per trade actually would go up to $250 to $500 per thousand of trading capital. And the reason is because we're getting those safer entries. The entries that we get in a high VIX environment is a lot safer. Even though that's meeting the requirements in a low VIX environment, if we get it, they're just safer in a high VIX environment because Forex behaves better in a high VIX environment. It seems counterintuitive, but that's the reality. We've been doing this a long time, guys, and that's just what happens. Forex, when you get into a low volatility environment, I will add to this that you almost want to find what the trend is and find a pullback in that trend and keep going with the trend, because a lot of times in a low VIX environment, it's almost like the bots go into like a very slow grind mode, and you'll just start seeing like the move just doesn't stop. And you're like, why is this move continuing? Especially in the evening hours when it's supposed to be quiet. That's the kind of stuff that happens. So we tread carefully. So what does that mean? You could do 8 out of the money contracts. So again, this is more advanced stuff, like out of the money approaches. We don't normally do that on the official calls because what we're trying to do is, out of the money means you're expecting a move, but you're risking like say $20, and that might just go poof because the move may not materialize, or it doesn't materialize soon enough and the premium crushes. So out of the money strategies are just different, but because they're lower risk, you can do more contracts. So this is 8 OTM contracts, 4 at the money contracts, or 3 in the money contracts per $1,000 of trading capital. All right, so that's give you some context. Most of the time what we're doing in the room is in the money stuff, right? Occasionally we may, depending on the market action, we may say go at the money or a higher premium capture on stuff, and then you can size up a little more. So this again is just a recommended guideline. Ultimately, you guys have to do what you're comfortable with. If you just decide you're going to pare down to like one lot right now until things get a little better, that's fine too. But you don't want to trade under pressure, so don't pressure yourself out on your size relative to your capital requirements that we set forth here for your account. So that's pretty much it. Just wanted to cover that last bit there about money management and how I like to look at VIX above or below 13 and how that would affect money management. And so obviously if you're more experienced, you've probably traded long enough with binary options that you know what to do. But this, if you're starting out, it's a decent framework, and helps you keep the right frame of mind and keep an eye on that VIX, because believe me, the guys in the room like Craig and Yaz and those guys, we've all seen it, and some of our worst performing periods of time have been on these low VIX environments. So we're just trying to keep a safe watch out there for you guys, keep you guys out of trouble. All right, guys, thanks for watching. See you in the room. Hit me up if you have any questions. Take care.